What is going on, everyone, and welcome back to Explain the Charts. Today is September 28th, 2025, and we are looking at a Bitcoin market that is sending some incredibly mixed signals. The news headlines are a battlefield of bullish and bearish sentiment. We're seeing extremely bullish price targets from major firms like Bernstein and Standard Chartered, who have revised their year-end targets to over $200,000. This optimism is largely fueled by powerful tailwinds from institutional adoption. For instance, the US CFTC just approved the use of Bitcoin as collateral for derivatives trades, a massive step in validating BTC as a legitimate reserve asset for major financial players. We're also seeing continued aggressive corporate buying, with Japan's Metaplanet recently purchasing another $632 million worth of Bitcoin. BlackRock's iShares Bitcoin ETF now holds over 55% of all U.S. spot ETF holdings, demonstrating a staggering level of institutional trust. However, this bullish narrative is clashing with some significant headwinds. Bitcoin just experienced a 5.7% weekly decline, and some traders are warning of a potential steep drop towards $60,000 before any major leg up. Macroeconomic fears surrounding a potential government shutdown and Federal Reserve decisions are keeping investors on edge. We even have analysts like Mike Novogratz warning that $1 million Bitcoin would signal a U.S. economic collapse, highlighting its dual role as both a growth asset and a potential hedge. So, with this intense tug-of-war between bullish fundamentals and bearish market fears, let's dive into the charts to see what the price is actually telling us. Starting with the daily chart for a long-term perspective, we can see the incredible run-up that began around the end of 2024 and carried us into new all-time highs this year. The price action has been defined by a powerful uptrend, but it has recently entered a period of consolidation and uncertainty. We can clearly identify a major resistance zone between $114,000 and $116,000. This area has rejected the price multiple times over the last few months, and the news reports correctly identify it as a critical level bulls need to break. The absolute peak to watch is the July high, just shy of $124,000, which serves as the primary target for any sustained breakout. On the downside, we have a very strong support zone that has formed. News reports highlighted bid liquidity around $108,200, and looking at the chart, we can see the price has respected the $108,000 to $110,000 level as a solid floor recently. A more significant, psychological support level sits around the $100,000 mark, which was tested back in January and February. The structure here is a large ascending channel, but recently we've been trading in a tighter range within that channel. The market is coiling, building up energy for its next significant move either up or down. Let's zoom in on the price action from the last couple of months to get a clearer picture. We can see the sharp rejection from the $119,000 level in late August, which led to a swift drop to test our key support zone around $108,000. This move aligns perfectly with the news of the recent weekly decline and shows that profit takers were active at those higher levels. However, look at the strong buying pressure that came in right at that support level. This indicates that institutions and large holders are indeed, as the news suggests, buying the dips and view these lower prices as a value area. Since that bounce, the price has been trapped in a range roughly between $109,000 and $114,000. This sideways price action reflects the market's indecision as it digests the conflicting macro news. Volume has been tapering off during this consolidation, which is typical before a major move. We are essentially waiting for a catalyst to force a breakout or breakdown from this range. Switching over to the 1-hour chart, we can analyze the short-term battle in more detail. Over the past few days, the price has been extremely choppy, oscillating around the $109,600 level. We can identify a very clear short-term resistance right at the $110,000 psychological level. Every attempt to push above it has been met with selling pressure. On the support side, the $109,100 to $109,200 area has provided a temporary floor for price. This tight range shows a perfect equilibrium between buyers and sellers in the immediate term. Neither side has the strength to establish a clear trend right now. For any intraday trend to develop, we would need to see a decisive break and hold above $110,000 or below $109,000. Until then, the price is likely to remain range-bound and sensitive to any breaking news. Finally, let's jump to the 15-minute chart for a scalper's perspective on the most recent action. Here, the tight trading range is even more pronounced. The price is essentially pivoting around the $109,600 VWP, showing a lack of immediate directional bias. For very short-term traders, the strategy has been to buy dips near the low $109Ks and sell rips towards the high $109Ks. A key level to watch on this time frame is the recent high around $110,010. A break above this with a spike in volume could trigger a quick move to test higher resistances. Conversely, a break of the local low at $109,116 could signal a move down to retest the broader support at $109,000. This time frame highlights the current state of extreme indecision. Alright, let's switch back to the daily chart and recap everything we've discussed. The market is fundamentally strong, with institutional adoption continuing at a blistering pace, but it's currently constrained by macroeconomic uncertainty. This is reflected in the chart as a period of consolidation after a massive run-up. Let's reiterate the most important price levels to watch. Our critical support zone is from $108,000 to $110,000. As long as we hold above this area, the long-term bullish structure remains intact. A daily close below $108,000 would be a major warning sign for the bulls and would open the door for a retest of the $100,000 psychological level. The primary resistance area is between $114,000 and $116,000. A decisive breakout above $116,000 with strong volume would be an incredibly bullish signal, likely leading to a retest of the all-time high near $124,000. So what's my unbiased take on what could happen next? The most probable short-term scenario, with about a 70% likelihood, is continued sideways action within this $109,000 to $114,000 range as the market waits for a catalyst. For the medium term, I lean slightly bullish, placing a 60% probability on an eventual breakout to the upside. This is based on the powerful underlying institutional demand we are seeing in the news. This bullish case would be strongly reinforced by continued positive ETF inflows and a clean break of the $116,000 resistance. The bearish scenario, a breakdown below $108,000, has about a 30% chance in the medium term and would likely require a negative macro event to trigger it. The extreme target of $60,000 mentioned in some reports seems very unlikely without a black swan event. Keep a close eye on those net ETF flows and any announcements from the Federal Reserve. Those will likely be the key drivers for Bitcoin's next major move. That's all for today's analysis on Explain the Charts. If you found this helpful, please hit the like button, subscribe to the channel, and let me know your thoughts in the comments. Remember, this is not financial advice, so always do your own research.